this go. All right. All right. All right. Things are a little better here. What's going on in the world? What's going on in the world today? There we go. Man, I got to get a new webcam. It's like, it's not that good, is it? It's always like granular or something. Anyways, guten Morgen. Sorry for being all over the place. Hey, it's a complicated life. How do I look? Do I got it? Oh yeah, I didn't even think about it. Check that out. I got some dollar. I got some yen or some euro. I have to turn my euro the other way. Huh? Got some euro. Nice. Look at that. Cool. Or this one. I don't know. Which one do you like better? Whoa. Yeah. Cool. Cool. So, anywho, everything's good. We're good. Everything's good. Things have changed, huh? So, fill out the poll. Let me know how you feel about the markets today. Are you going to be risk on or very risk on? Risk off, very risk off. Let me know how you feel about the ceasefire. Is it going to, I mean, it doesn't matter like what you think or feel. It's more like, what does the market tell you? That's really what we're trying to get at, right? Oh, we got dirty Tom Fords. Oh, Tommy. So, what is the market trading is really the question, huh? So, what are you trading was the question, but you should be trading what the market is trading. Yeah, oh, faux show. So anyways, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. So please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hang on, I can't find there it is. Cool. So today we're going to use TradeRs, obviously, and we're going to execute through Trader's Way, obviously. It's the match made in heaven. Analytics and execution. What more do you need? How about some coaching? Yeah. Holy smoke. So anyways, let's log in. Oh, that's interesting. Let's get an update.
Good morning. Let us get you up to speed with a decisive shift in global market sentiment as we head into the European session. The market has entered a period of aggressive risk-on sentiment characterized by a massive collapse in implied volatility and a synchronized rally across global indices. This shift is being supported by a climb in the US 10-year yield, suggesting that capital is rotating out of the safety of bonds and back into equities and pro-cyclical currencies like the AUD and NZD. Biggest movers right now: volatility index, US oil and Brent crude oil are down, silver and Ethereum are up.
Hang on, I'm just letting him know, him meaning Aiden, yeah, you have to teach him everything. Hey, it's like teaching a new member of your team. All right, so what I'm teaching him here is, look, dude, it's after 7. This report was written at 6:53, so he might argue. I just told him, hey, if it's after 7, well, it's actually 7:30. So, I should say, dude, maybe after 6 a.m. or whatever. We're not heading into the European session anymore. It's London lunch, So it's like, dude, we're heading into the New York session, right? Oh, my Euro cut link. Messing with it. See? Euro's falling apart. So anywho, look at what's going on. S&P 500 up 3%. VIX down 21% from yesterday. So we're at 20. Don't forget, we were staring down 33 about a week ago. Oh, schnicker. Bitcoin, we've been, 65, 68, 65, 68, 65, 68, 72. Yeah, a little bit of risk on there. Gold up 3%, although we've been around this 48 for a while. I won't get happy until we're clearly above 5K. Shoot, I'll be really happy at 7K. But let's get above 5K and stay there. Yeah, okay. So I'm not that excited. Look at oil. We were, 118 at one point yesterday, and now we're 93.5. Wowzer. What a great day. It's great. You guys happy about that? Yeah. You were kicked off the. Well, you weren't kicked off the chat. Free members don't have access to the chat. Popping the mic. Okay, I know what I just did. Popping the mic. There we go. That's probably a little better. Popping the mic. Popping the mic. Yeah, pop it and drop it. Yeah, me too, Lucas. I was looking forward to hearing a report from you about what's going on. Yeah, because, you know, we hear the media, for example, let's talk about oil prices. They tell you, okay, oil is, I don't know, $110, right? No, the futures contract is $110. And which futures contract matters too, which I covered, I don't know, week and a half ago. I went through all the different futures contracts and showed that they're different prices. And I showed that if you could wait a few months, oil was actually like $80, not 115, right? But also, if you needed oil that day, you could go to the market. So when Brent was being reported at being like 110 or 115, if you actually went to the market and said, I want to buy oil right now, it's not 110, it's 145. Yeah, sure. Yeah, sure, B Rad. Yeah, it was just um, it's just things are rolling out. So we launched TradeR's 2.5 earlier this week, and it's awesome. And so part of that was part of that is part of the new system, the rules, let's say. And so because now the back end is so amazingly strong, now we can start worrying, not worrying, but adjusting all the little kind of rules and tweaks on the um, how the platform interacts with the individual user, and so part of that interaction will be how you say in English, based on the subscription that you have. So in the old days, what you would do is say, you know, your subscription would give you access to this part of the site, and this other subscription would give you access to this other site, and maybe a third would give you access to this and that. That's pretty old school, right? But now what happens is the machines communicate with each other, and because it's not a website, it's a database, it can dynamically give each person its unique experience. And so part of that was, do you have access to this? Do you have access to that? What are the rules? And at some point, I think I could even redesign the entire kit and caboodle to customize everything, right? But long story short, um, we're able to do some pretty cool stuff that's about to happen, because now our foundation is so good. Let's put in. I mean, we have a choice. We can put in windows, or we can put in some stained glass windows. Oh, dude, let's go stained glass. Now we can do some classy things. All right, let's see how you guys feel. And yeah, hang on. My phone in the other room is got an alarm going off. Let me get that. BRB. Nice alarm. So, anyways, all right. All right. Boop 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 doop doop boop boop doop. Boop, 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 boop. All right, so we got all that. Hey, we don't have CPI today, do we? I think what happened was Aiden looked at the calendar and saw PCE, because I think it's PCE, isn't it? Google it. And said, oh, PCE, that's inflation. What's inflation? CPI. And so I'm like, oh no. You know, again, a genius 5-year-old, right? That's just how it is. It's a genius 5-year-old. So it's good thinking. Yeah, it's true. PCE is an inflation reading, but PCE and CPI are not the same thing. Okay? Yeah. Yeah, Greg, my wife got mad at me because I'm sitting in the backyard by the pool. It's a beautiful day. I got a laptop. I got coffee. I got a cigar. And she's like, what the hell? It's like 6:30. Right? 6:30 p.m. You're like, what are you doing out here? Why aren't you in the house cooking? Cook dinner. I'm hungry. And I'm like, right? Come on, babe. There's a global crisis going on, right? So, anyways, yeah, it was pretty funny. And it was kind of cool too because at Tradars, Jim's like, hey man, something's happening in the oil market, and I'm like, yeah, ceasefire. And we're like right there. Yeah. So Jim's yelling at me in the chat. And my wife's yelling at me from the deck, the veranda, and and I'm like, I'm just trying to trade. So, anyways, it was cool. So I'm very interested to see what happens to yields today. But look at this dollar, man. Oh my God, we're below 99. Yeah. Yeah, well, B-Rad, the the cheapest premium level is like $1 a day. I don't even know what it is. It's cheaper. It's cheap. Like, but anyways, no. So let's get an update here.
Kiwi dollar US dollar rallies to near 0.5850 amid risk-on mood, RBNZ's hawkish remarks. Euro steadies at 5-week highs near 1.1700 amid market optimism.
Israeli military launches largest strikes against Hezbollah in Lebanon. Euro, supported with firmer data and ceasefire. BN, Slovakia retail sales fall. Dval, 8%. US President Trump, talking tariff and sanctions relief with Iran. Euro-US dollar surges above the 1.17 handle as Trump announces a two-sided ceasefire. What's next? Gold, ceasefire rally driven by yields and rates. Commerzbank.
Cool, which is really nice because, like I said yesterday, I own probably too much gold. Don't! But then today you look at it, you're like, oh, well, okay. One other thing I guess I should mention about last night that I thought was interesting. So there I am, again, a good view of the lake. The sun is setting. I'm sitting by the pool. I'm in my Adirondack chair. I got my laptop. I got my charts open, smoking a cigar. I'm drinking coffee. But also what I was fiddling with right around this period of which the news was released about this ceasefire, I couldn't get Al Jazeera to work. So sometimes
I tried to stream Al Jazeera or BBC, or I tried to get an international perspective at that time of day, like this gap between the U.S. close and the Asia open. Bloomberg was streaming some nonsense, had nothing to do with the actual market, right? Some stupid program because, the markets are closed. So then I'm like, hey, I'm going to pull up Al Jazeera because, we're two hours away from the war, right? And it wouldn't stream. Al Jazeera was blocked. You know what I mean? Like, really? But I couldn't get BBC to work either. So it was kind of interesting. Somebody was out there putting us in the dark side of the moon. Yeah. Kind of interesting. So anyways, look, things have improved a lot since April 1st. Okay. Which is, actually, the bottom was March 30th. Remember. Was that right, Jim? Yeah, and you used the same service. Well, maybe it was me. Maybe I was being blocked. But anyways, what is seasonal is April 1st. And again, an amazing coincidence. Yeah, just amazing coincidence. Yeah. And how do we get to these numbers? Okay, volatility has dropped 20% today, 30% this month. Isn't it nice to know all this now? And then we weight it and we create a score. So VIX is good. It's great. Oil down 16% today, flat for the month. Dude, isn't it nice to have all this data in real time? I mean, shut the back door. How long have you been tracking the 210 spread? You're like, I've never tracked it. Oh, well, you're tracking it now. Yeah. Hey, you like tracking junk bonds? I love tracking junk bonds. Yeah, cool. Okay. So anyways, interesting. So the big movers, VIX is down. WTI is down. Bitcoin is up. Lovely. It's nice, isn't this? Isn't this nice? So I do this so that Aiden knows, not just on this page, but like in his brain. I say, hey, pay attention to this, Aiden. It's important to know what's moving right now in the last 24 hours. Ignore everything that hasn't moved up or down 1%. But pay attention to everything that has moved up or down more than 1%. Pay attention to that because it'll tell you, since it's 24 hours is short term, it'll give you a sense of what the sentiment is right now. What's happening right now. And then you can correlate this data and say, well, if Bitcoin's up and WTI is down and VIX is down, that's a risk-on scenario. What are the things that have been moving risk-on? And then you can get that into the correlation coefficient, which we analyze. Cool. Now, yesterday, all of this was completely opposite. So the interesting thing, if I may be so bold, we've gone from dollar bullish to dollar bearish, and it's already updated. It updates all the time. So pound dollar up, euro dollar up, even Kiwi. Remember, this was a dog with fleas that had fleas on the fleas. Okay. And now it's good. It's good. Things change, man. At least you know they've changed. Aussie dollar up. USD kitty cat flat. USD yen down. USD Swiss franc down. Cool. Lovely. What do you think? It popped and stopped. So what you want to do is look for the longer term moving averages to kick in and then push up. So the up and over and up, we call the stairway to heaven. The stairway to heaven. Okay, that big spike, let the moving averages, right? And then we'll slowly get back into proper price action. But the up and over is pretty typical on a spike. So anyways, cool. What are the yens doing? Up, 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 down, down. That's interesting. Yeah, we talked about the yens, was it last night? CB Red. I think we talked about it last night, right? All the yens up, or most of the yens up. It had nothing to do with war. I was a little concerned about how the yen would react in a situation of weak oil. Like we talked about, if there was. Now, I said, be more focused not on that if peace shows up, because one of my messages to the team was you probably already exposed to positive impact if there is peace. I said, for example, you probably own the stock market in your retirement account. And if there's peace, I would suspect stocks would go up. So you're already in that trade. Or if you don't own any stock, which is half of America, but let's say you don't have any retirement account, but you do put gas into your Hyundai Sonata, and gasoline prices would likely fall if oil prices fall, and now you have some additional disposable income, and that would benefit you. And plus, food inflation might come down and all that kind of stuff. So, you already win if it comes down. So I said what you should be worried about is what if the poo-poo hits the fan? And WTI is facing, I think we even had one particular scenario in which WTI goes to $174.58. You're like, well, what if that happens, right? Because it could. And so that's what we were focused on. And then I said, well, look, if oil goes up, yen would probably weaken because Japan would have to spend more yen to get the amount of oil they need. But if there's peace and oil gets cheap, that rallies the Nikkei, which would historically, based on the Pearson correlation coefficient, would weaken the yen. So I'm like, it's a little conflicting. So if there's peace, the yen weakens. But if there's war, the yen weakens. Only one of them comes with it, central bank intervention. So I'm like, that's a little complicated. But if there's war, the dollar would probably get strong. And I'm pretty sure of that. Right? So anywho, it's interesting to see how it all turned out. Focusing on Swissy, bullish, 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 neutral, neutral, bearish, bearish. So we do see like CAD weak and dollar weak. We do see it across the board, which is kind of cool. And notice I moved the currency index over here. By the way, and I don't know, I asked Aiden to come up with a radar name for the currency index. Do you guys have any ideas of what we should call the currency index? because I'm basically building an index in my mind here. So you don't need to, because I also built a currency index. But what do we call it? A value radar, a strength radar, a index radar, or if you're French Canadian, radar du index. But anyways, we got to have a radar, Jim. We got to call it something radar. But so anyway, so I'm building an index in my mind where I'm like, okay, pound and Kiwi are strong, CAD and US are weak. Good, good, good. Now we can confirm that over here. And Kiwi and Aussie and pound are strong. Well, we already just did that. Dollar and CAD are weak. So we've just done all of this. Index radar? Yeah. And because I think what we could do too is not just do Forex because I created indices for Forex pairs, but why not put stock indices in here too? And then I could, isn't there there's a commodities index too, isn't there? Out there. I mean, I can create my own, I guess is probably the better thing. But I think there is like a MSCI currency commodities index or something. And I could just pull that. You guys are into the index radar? That's cool. All right, hang on. All right. Cool. So that's overnight. Look how weak dollar is. Yeah, baby. That's a big deal. Look how strong Kiwi is. So what you're supposed to do, ladies and germs, is go long Kiwi dollar first. Then Aussie dollar second. Pound dollar if you want. Then what? Kiwi CAD, Aussie CAD, maybe pound CAD. And you probably want to stay away from Aussie Kiwi, which had a huge score when you look at macro. But this isn't looking at macro. It's only looking at the magnitude of price changing and the direction of the price change. So it's just pure charts. So one of the things I thought I could do is show you like what I just did. Kiwi dollar up, Aussie dollar up. And by the way, this is how I first started trading a bajillion years ago, 25 years ago. This is actually what I did. I would go long Kiwi dollar first. I would go long Aussie dollar second. And I do this before I even look at my chart. Before I did any technical analysis, I'm like, that's it. I would organize it left to right, not up and down. But members of Tradars voted for like the COT report. They're like, hey, we want it vertical and not horizontal. Okay, the community voted. I'm like, well, I'll do it your way. You're the boss. So anyway, so this is how I do it. But, you know, I could probably put an image here of showing left to right. But build a pair, like build a bear, maybe I'll just do that. Like, that's cool, right? Because what do you do in the situation of Aussie, like Kiwi CAD and Aussie CAD? they might be flipped when you do the pair. So you could get yourself in a situation of to take advantage of the synthetic currency indices that you would actually sell, not buy. And so it would just, Aiden would do all that automatically for you. One of the things I do like, and I want to pop into this, is I like how he explains, Aiden is a male name, but he's non-gender. I like that Aiden shows how he created the indices. Isn't that cool? Oh yeah, I forgot about this. Oh yeah, let me take a screenshot of this right now. Forgot about this. This came up yesterday. Forgot about it. Sorry, I was busy trading the markets. Yeah. All right. Cool. Gonna do that. Again, I'm working on that. So we got news in 20 minutes, right? Yeah. Cool. So anyways, you can do medium term and long term, right? So dollar has gone from bullish to neutral relative to 30 days ago. But overnight, you see how cool this is? It's neat, right? Yeah. So good. All right. All right. Cool. So he figured out, so he told me, Aiden told me, I should stop doing gender. Aiden told me why the calculation was done this way. And so, cool. So I said, I don't like that. At least visually, it's confusing to my simple human brain. I sounded like Captain Kirk there. My simple human brain. Cool. So volatility collapsed, oil collapsed. Really? Yeah. Yeah, really. So this is what I was talking about earlier, that this has a fundamental good, huge score, but we're only partially looking at the charts. Cool. And now that I created the index radar, which is interesting because if we go over here, oh, he hasn't renamed it yet.
Good morning. Let's get you up to speed on the mask.
I think I want to add a column here. So we can look at short-term technical analysis, which is momentum, long-term technical analysis, but then we should do currency index analysis and say, based on what's happening overnight this week and this month, if we built indices for Aussie and Kiwi, what is the output of that analysis? Because we know up is what has been. So what if I just did overnight? Up is fine in general, medium and long term, but we could use the overnight 24-hour, really, the 24-hour Aussie index versus the 24-hour Kiwi index and make it hypersensitive. Because it's Aussie versus everything, Kiwi versus everything, and then the Aussie Kiwi indices versus each other. That could be pretty clever, huh? What do you guys think of that? Cool. So anyways, we'll get into that. We'll get her done. Cool. So Kiwi cat has been a dog with fleas. Now today I think they'd be neutral. So that's why I want to add that to make these even hypersensitive. So to do that one calculation on that one cell on that one column would require 10, 20 calculations, and then the compare of those 10 to 22. 22 calculations to give you the one score. To make this go up or down based on right now. Just 22 calculations times everything. 22 calculations times 73 assets. I think that's right. So 1,606 calculations. Yeah. Which is better than doing it in your brain, right? Yeah. Yeah, I don't. Oh, he did populate it. Thank you, Aiden. He did it. Yeah. I haven't checked its accuracy, but when I switched over to 2.5, he dropped almost all of these calculations. I'm not sure why. That was actually kind of interesting, moving from 2.0, which actually was updated many times to be 2.3, 2.4. And then we moved over to 2.5, and he dropped a whole bunch of stuff. And I don't understand why. But anyways, so we had to go back and fix it. And so it looks like he's done that. So now we want to see this yield curve change for sure. For sure. And we want to see money going into some of these assets. Now, how do you analyze this? Yield curve is flattening, highlighted by a 3.9 basis points drop in the 10-year, while the 2 remains stable. So he's looking at the 2 and he's looking at the 10. Now, you see how it was 4.28 and now it's 4.24? Why the green candle? Well, to get the yield down, money had to flow into the 10-year yield, 10-year treasury, pushing up the price of the treasury, pushing down the yield. So now we are actually tracking money flow. If you're a Forex trader, you care about money flow. That's all you actually really do is money flow. And so then we can analyze, well, what does it mean if money is going into the 1 month and out of the 6 month? Money is going, out of the middle of the curve and into the long end of the curve. What does that mean? Well, okay. So yields are dropping on the 10, while the 2 is flat, indicating risk aversion. The 2-10 spread has narrowed, so we're still in the throes of risk off. So we'll see how this changes throughout the day. Where is money going? So if the Fed's going to cut interest rates in the future, then people locked in, let's say a 10-year yield at 4.25 is going to be great if over the next year things improve, there's peace, inflation goes away, the Fed cuts, and therefore collecting 4.25 to 4.33 on a 10-year will be great if inflation drops to 2.5%. And now if they're buying to collect and lock in the 4.25 yield, then the price, they're demanding that yield, the price will go up further as people are buying the supply of the 10-year. And then the new supply of the 10-year will pay less than 4.25. That's why they want to lock it in now. And so, yeah, it's kind of interesting, right? So the yield variations signify that the market expects the Fed to maintain current rates. This is important because Aidan's been telling this for a while, and if you listen to the knuckleheads on TV, they'll tell you the Fed's going to raise, the Fed's going to raise, the Fed's going to raise, which only tells me they don't know what they're talking about, right? I like to say they went to the Cambridge Community College, not Harvard. So what does it actually mean? Well, what I taught Aidan was how to analyze changes in yield curve and the shape of the yield curve and why, in the behavioral finance of why somebody would make these decisions with their money. And it's because the smart money doesn't think the Fed's going to raise. They're on hold. And now I've explained to you many times, if you're going to raise interest rates because inflation is high, that usually makes sense. If you have demand, if your demand is too high, and there's just not enough oil to go around because everyone's demanding it, because your economy is booming. Well, you can cool off the economy a little bit and cool off inflation by raising interest rates, making money more expensive. Cool. That's not the situation we're in. Yes, we have high inflation, but not the demand side of the equation, the supply side of the equation. You can jack up interest rates all you want. All you're going to do is kill your GDP. Yeah, so like people, you got to be very careful with the media and YouTube knuckleheads that spit out and spew out nonsense. And then in this case, you don't even have to ask me anymore. Like, Wayne, why should I pay attention to the yield curve? What is the yield curve? And how's the yield curve changed? And how do I read it? What does it mean? Oh, it's all right here. And it gets updated multiple times a day. The Fed's on hold, bro. Still risk off in the medium to longer term based on not opinion, but how other people have developed opinions. And then how did they deploy their capital based on their analysis and their opinions and their bias? Where are they putting their money and how are they moving their money? Well, they're moving from the middle to the long end of the yield curve. What does that mean? And the cool thing is, over the next 30 days, if the peace holds, and then and probably in 2 weeks we'll get another ceasefire for another couple of weeks, because these things are complicated things to negotiate. But as long as the war is up, right, you will see the shape of the yield curve change, which is important to have that data. And then Aiden will tell you what it means. And it could help. And of course he knows, and it goes into his outlook. But now you, as a professional trader, right, you're making professional investor grade decisions based on real data, and you're aligning what you're doing with what smart money is actually doing. This is a survey, not of how professional investors, and not just Fed funds rate people, but the entire global treasury market. They all analyze the same information as you, and this is the flow of capital. You need the flow of capital to change valuations of capital as a Forex trader. So I guess you should probably track the flow of trillions of dollars and then analyze it. How is it changed over time? And then interpret it as risk on or risk off. And how does this impact monetary policy? And so you will likely see these things change over time. And you probably never looked at this before, but even if you never look at it again, it goes into Aiden's brain, and Aiden is aiding you. Yeah. Yeah, which is important because you have to trust. And if you're like, well, I know I'm not tracking this, but I know Aiden is, and that's all that matters to me. And if I asked him about it, he would tell me about it. What do you guys think? Did I lose the live stream? What do you guys think? I think we'll come back to the technicals, and we'll do that in a bit. Look how fast they load now. Yeah. But I'm working on them today. Is one of my goals.
Good morning. Let's get you up to speed on the massive shift in global
I
sentiment.
want to get ready. Oh, wait. FOMC. 30-year mortgage rate. Yeah, we miss you, Lucas, for sure. And I still want to go to that conference with you in St. Louis 1 year. 1 year, we'll figure it out. The farming, the finance conference for farmers. I think farmers and finance is like a perfect combination. Because there's lots of people that say, yeah, I like to trade. What do you trade? Oh, I like euro and I like gold, or I like oil, But how often does somebody say, you know what? I need to buy $100,000 worth of nitrogen. You're like, really? Yeah, but I don't like the prices, so I'm gonna look at potash this year. You're like, what? Yeah, I'm going to buy $90,000 worth of potash, and mix it into my dirt. So I really hope, sorghum prices go up. Like, dude, farmers are legit traders. Oh my God. I mean, talk about being real traders. Yeah, like, wow. Put your butt on the line every year. You're like, you better know what you're doing. Yeah. So anyways, let me ask Aiden, like don't we have BCE, or is that later in the week? That's tomorrow. Tomorrow is BCE, huh? Do we have anything today? I mean, the FOMC is right. And yeah, 11 o'clock, 2 o'clock. Yeah, I think this is right. 10:30. Yeah. That's it. Let me check. Yeah, I guess so. It was funny because I checked FX Street, and our calendar has more data than they do. Ours is better than theirs. Interesting. Consumer confidence. The question is it right? Yeah, I think so. I think this is like going from my brain.
Spike alert, 1 minute until United States CPI Consumer Price Index is released.
Okay, this is BS, though. Just a heads up. This is BS. We don't have it. It's not a thing. So interesting. Interesting. You can scroll, FYI, you can scroll through the week. So FOMC meeting minutes is an important thing to read today. And then tomorrow, in 16 hours and 30 minutes, Japanese consumer confidence. Cool. Tomorrow, mortgage rates. Now, why do I do this? Well, because I am building a real estate radar. And right now I have data for the United States, but wouldn't we want to have a real estate radar for the G10? Does it matter? Does it not matter? I don't know. Then tomorrow at 8:30 Eastern Daylight Time, that's right. PCE. Cool. Great, but I don't want him to report core. I want headline. So I have to teach him that. Tomorrow's initial jobless claims, that is correct. Yeah, and it would be 24 hours from now. Yeah. Corporate profits. See, I don't care about corporate profits. I care about CapEx. So Joseph is focused on Aussie Kiwi for Biden. No, 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 no. Joseph. For example, Kiwi and Aussie are the two strongest right now. No. I mean, you might have to watch a long time. Now, that was the trade yesterday. Yesterday, Aussie Kiwi was correct. But what's happening right now is that would be not correct. Right, but be careful because the world has changed in 24 hours. So, longer term, Aussie Kiwi still makes sense, but Kiwi was the dog with fleas yesterday. And that's moved up. So there is money flowing into Kiwi. There is. Yeah. And over the last 7 days, Kiwi is up 1%. Aussie is up 2%. Be careful. Just for example, whatever has happened has impacted these two currencies that way. Like, that's it. Like, that has actually happened. So you might be right, but I would be very cautious about that. You would have to see Kiwi collapse first before you bet on Kiwi collapsing first, right? I'm assuming Aussie Kiwi long, right? Buy Aussie, sell Kiwi. But I don't know what you're doing. But right now, just look at that and say over the short and medium term, that does not make sense. Whoa, 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 whoa. Now, over the long term, it does make sense. Because you're analyzing the difference between the two economies and you're doing institutional sentiment, retail sentiment, and you're also looking at some seasonality. Yeah, and you got charts that are bullish. Yeah. Long term. Yeah, so the way you want to read this is go back to sentiment, go to your currency indice, and your long Aussie. Look at that. Actually, Kiwi just got stronger than Aussie, just as we've been talking. You probably want to go long Aussie dollar or long Aussie CAD. Okay, those are your two best things. The worst thing you could do is Kiwi Aussie. Okay, good to know, right? Yeah. That's why we have the data. Powerful stuff, right? I mean, look, I was going to create like a hit list, like what to trade. Wouldn't it be funny to on this page to create something like what not to trade? Do not trade Aussie versus Kiwi. Do not trade Aussie Euro. Do not trade Kiwi Euro. Do not trade dollar CAD. Do not trade dollar yen. Do not trade CAD yen. Do not trade pound Swissy. Do not trade Swissy yen. Wouldn't that be cool? Because we all think differently, right? Like I struggle with double negatives, but I know people in my life that are great at double negatives. And I have to stop. I'm like, wait, that's a double negative. So, right? Like, so you said what's not to like, which means you do like it? Like, or what? Or do you not like it? Because when you say what's not to like, I don't know. Do you like it or not? Like this is me. Like just say it. Don't say it backwards, right? So, but to each his own. So trade this, not that. Wouldn't that be fun? All right, why not? I'll see what I can do. As long as it makes Joseph happy, it makes me happy. Yeah, it's not a bad thing, right? Right? You're like, don't do this. It's got just as much value, but what I was getting at is some people might, their brains might appreciate, don't do this, and other people's brains would appreciate more of, only look at these things. No, you're funny, Joseph. How dare you, Joseph? Yeah. Funny how? Like a clown? Yeah. Now I have to watch Goodfellas. So, anyways, the news came out. Yada, yada, yada. So, what we're basically just trading the day, right? Trading the day. Our number is 87.51. I think we did this last night, didn't we? Look at that. It's not bad. Let me move it a little bit better. You see what we did? So we have this and this. So I connected that spike with that pivot. So I had it like that. Okay. And then down to the neckline. And potentially $74.30 if you're going to use pivots as inside range. Okay. Okay. Cool. So we're not far from that bottom. Maybe today we can get 87.50. Wouldn't that be nice? Gold, we have pointed up and we got above our standard deviation. We have a pullback. Maybe time to pick up some more. I don't know. What are you going to do today? What's your thought process? Cool. Well, we're one standard deviation below the mean, and the mean has a positive integer on this time frame, which is automatically drawn for us. Cool. I mean, the other thing the other way you could play it is like, well, I think it's going to fall way back here. Okay. So that's 4,700. So your plan A is here based on one standard deviation below the mean. And check this out. The other one, 2 standard deviations below the mean. Oh my God, it's so beautiful. Yeah. And then let's go to exotics. And there's 2 trades on USD Rand. 2 trades. USD, right? Cool. 4-hour candles, y'all. Okay. Nice. Euro Rand. There is 3 trades. All the stops up here. Let the sucker run. Cool. Notice like I'm short in tomorrow's pivot points. Yeah. Hey, you got to be ahead of the curve, right? If you're not ahead, you're behind. So there's 3 trades there. And then this one has 1, 2. Oh, 1, 2, 3, 4. This one has 4 trades. And these stops are from here, locked in profit. That one at break even. And then the other one up there. And I don't want a limit. I want to have unlimited profit. Cancel take profit. I prefer unlimited profit. Okay, cool. Nice. Cool. And so maybe tomorrow or something, I can move this stop to break even. But right now, I'm comfortable with it being up here. Let it run. Give it some room to breathe. And if you're not sure how to do that, the training wheels to use, you go to insert indicators, parabolic stop and reverse, and you plop it down there. And so on this time frame, and I could do it if you want, you could move your stops here and use PSAR as the training wheels. And every hour, you can move your stop 2 pips. So that's another way to manage your risk. Now you have a volatility-based stop strategy. And when the volatility is good, which means you're short and it's falling hard and fast, let it be. Don't worry about it. Forget about it. But if it turns around and starts coming back, that's bad volatility. And you want to lock in as much profit as possible. So there's different ways to skin this cat. Cool. And that's how you trade. So what have I done here? I've shorted the dollar. And a little bit of euro by accident, but I can't help it because the carry is so good. But in my mind, it's the same trade. Look, interest rates are lower in Europe than the United States. I just get a better carry. But it's the same thing to me in my mind. So anyways, I gotta go, babe. That was real. Peace on earth. May the pips be with you. May your profits be above average. That just happened. Oh my